All right, today we're talking about something huge, something that, frankly, a lot of people thought would never happen. We're talking about the day your bank, the one with the app on your phone, starts speaking the language of crypto. The wall between Wall Street and the blockchain, it's not just cracking anymore, it might be completely gone. Let's get into it.
Seriously, just stop and think about that for a second. What if the bank where you keep your checking account, the one you trust with your money, just decided to launch its own digital dollar, right on the blockchain?
Well, you don't have to imagine it anymore, because that's exactly what just happened. This isn't some far-off prediction, this is happening right now. So, who's the one making this massive move? It's SoFi, a major digital bank here in the US. And what they've just done, well, it's way more than just a new product launch. This could be a fundamental game changer for how all of our money works.
Okay, here's why this is such a massive deal. We are not talking about some crypto startup here. This is a nationally chartered, regulated, and insured bank. And for the very first time, a U.S. national bank has put its own digital dollar, a stablecoin, directly onto a public blockchain for anyone and everyone to use. This is one for the history books, for sure. Now, for anyone who needs a quick refresher, what in the world is a stablecoin? Simple. It's a type of crypto token that's built to avoid all that wild price volatility. And it does that by pegging its value to a stable asset, usually the US dollar. So the goal is always one stablecoin equals $1. So what makes SoFi's digital dollar, SoFi USD, so different? Well, they're building it on what they call three bank-grade pillars. First, it's issued by a real regulated bank, the kind with oversight. Second, and this is so crucial, it's 100% backed, one-to-one, by actual US dollars held in the bank's account at the Federal Reserve. So for every single digital dollar out there, there's a real dollar sitting in pretty much the safest vault in the country. And third, they're not just building it for themselves, they're creating a whole platform for other companies to use too. And this quote from SoFi CEO Anthony Noto just says it all. He doesn't see this as just another product. He calls blockchain a technology supercycle. They really believe they're taking the trust and safety of a regulated bank and merging it with the raw power and transparency of the blockchain.
SoFi's move is, no doubt, a massive headline. But it's not happening in a vacuum. It's actually a key piece in a much larger puzzle. We're watching stablecoins evolve from a niche tool for traders into a foundational piece of our entire financial system.
And if you want to talk about scale, just look at this number. The numbers are, well, they're staggering. In just the last year, stablecoins have been used to settle over $3 trillion worth of transactions. Let that sink in for a moment. This is not some fringe experiment anymore. It's a global economic powerhouse. And that incredible volume really tells the story of this fundamental shift. Just a few years ago, stablecoins were basically just poker chips for crypto traders to jump in and out of the market. But now, it's a completely different ballgame. They're becoming the rails, the actual infrastructure for global payments, for commerce. Some are even calling it production-grade financial infrastructure.
And hey, don't just take my word for it. As Chiara Munaretto from Stablecoin Insider put it, this is the year that stablecoins went from being a little side story in crypto to being the main event, totally reshaping how money moves around the entire globe.
So, the big question is, why now? Right? Why are major banks suddenly all in on this? Well, the answer, in one single word, is regulation. The rules of the road are finally catching up to the technology.
See, for the longest time, this whole digital currency world was kind of like the Wild West, operating in a gray area without a lot of clear rules. But that is changing fast. Governments and regulators are finally stepping in to build a real foundation to turn these digital dollars into a trusted, official part of our financial system.
And this didn't just happen overnight. There has been a clear path. It really kicked off with the approval of the Genius Act, the first major piece of crypto law from the U.S. Congress. That basically gave regulators like the FDIC, the agency that insures our bank deposits, the green light to write the rulebook. And now they've officially proposed the whole application process for banks that want.
And don't think this is just some rubber stamp approval. The FDIC is proposing a specific, tailored application where they're going to scrutinize every single detail to make sure these things are safe and sound. We're talking about a 120-day review period and even an official appeals process. This is the government laying down a very official welcome mat for banks. But you can bet they'll be watching very, very closely.
Okay, so we've got a major bank launching a stablecoin. We have regulators building the rule book. But what does any of this actually mean for you, for businesses, for the future of money itself? Let's break down the real-world impact. Just look at the difference here. It's night and day. The old way of moving money is slow. It takes days to settle. It only works on bankers' hours, which, let's be real, are not our hours, and it can be super expensive with all those fees. The new way, powered by these new bank-issued stablecoins, it's pretty much instant. It runs 24/7, 365 days a year. It costs fractions of a cent, and it's open to anyone on the globe with an internet connection. And the potential here is it's huge. I mean, imagine sending money to family overseas not in days, but in seconds, for almost no cost. Or think about a small business owner who gets paid the instant a customer pays, not 3 days later. Or even someone in a country with a shaky currency being able to save in stable US dollars with just a few taps on their phone. This is a fundamental upgrade to the plumbing of our financial world. So it all leaves us with one big provocative question. With regulated banks now issuing digital dollars on public blockchains, and with governments writing the official rulebook, are we watching the end of crypto as this separate, weird thing? Is this the exact moment it just becomes money, the new modern way money moves? It's a powerful idea to think about. Thanks so much for diving in with me on this one.